What's up, guys? It's November 7th, 2023. Had a pretty good day. Bulls had a run up and then we consolidated for more than half of the day. Still had good swings in both directions. Yesterday was an inside day after a decent amount of bull trend days. Bulls failed to tag the highs, and then these bulls failed to tag the highs, and then bulls also failed to tag the previous day's lows. So yesterday we got an inside day. So today we could expect maybe a bigger move, not necessarily a breakout. I don't think we were going to get two inside days to begin with, so I was looking at the extremes. First 6 bars of the day, we pretty much opened up around yesterday's closing price, which was right here, and I think we ran up and then had a sharp sell-off into support. This is a pretty big bar, and 80% of the time we could range at the open. So that means bulls are buying bear bars and bears are shorting bull bars, which is why I think it's important to sit out the open and just learn how to read the price action. In a few months, maybe you can start scalping the open. But the majority of days we range at the open, and it's quite tough if you're a new day trader trying to look for breakouts, shorting lows and buying highs. So bar one, we sell off, and then bulls find support and they push higher. However, we are at the 50% level, but bears are not getting continuation. So right now I'm thinking we are range bound within this range, and I'm just sitting on my hands. I'm flat. First 6 bars is range bound. Bulls start to get a strong push up, and bar 7 was a news bar. Here we can see they start to break. This is a really nice bull flag above today's high of the day. So if we draw a line at the high of the day, I'm going to change this to green just to make it easy to see. This is the high of the day, today's high of the day, and bulls get a strong gap, push up, pull back, and consolidate higher. This candle here closed above this candle, not by much, but it did, and that's important to understand, because this is saying, look, see, bulls are buying, see. It would be nicer if the bulls closed above this wick, but it doesn't matter. The bulls closed one tick above this candle and this candle, so it's a breakout. Bull flag breakout. And we break out of yesterday's high. So we do go to the extreme after an inside day, the previous day's extreme. Strong bull bar pushing right into breaking through yesterday's high and last week's high. Last week we had a huge bar on the weekly bar. Now we're seeing a continuation above that. So bulls are seeing higher prices from last week, yesterday and last week. Here's one push, 1, 2, and we can see three or four pushes in a good trend. So now we're trending above last week's high, which is good to understand the context of where the bulls are buying. These are higher price. This is the highest prices we've seen within a week, and bulls are buying it. We start to see it pull back into the EMA. So here's the second flag. We get flag pullback 1. Flag 2 or pullback 2. The pullback for the first flag is shallow. It gets a little bit deeper until we get a third flag. And I think bulls do make a new high here, barely. So, and you can see the market dumps. Okay, so bulls get a new high, but it's not that strong. Although we could say, well, you just said this was strong. Yeah, it was, but look how much the price has trended higher after the third flag. So although it is the same idea, how I said, oh yeah, it's a point, it's a tick, they close higher. Also look at the follow through after wick. This gives a nasty double top appearance above last week's high. So if we were going to look for reversals, it would be at fresh highs because bulls would be taking profits. Pullbacks turn into reversals, not all the time. However, this was a nice looking double top. If this candle, I didn't short this, but if this candle didn't have a close like that, and it closed below here, and pretty much this whole structure was like 1 or 2 points lower, even by a tick, I most likely would have got short. But same reason, since they had this close, I just let this one pass me by, because it's just, I'm trying to be a little like, if you short a double top in an uptrend, you have a better chance of losing money. So yes, in this situation, I could have made money, but if I took this trade 100 times, would I make money? I don't think so. So I didn't. That's how I'm trying to focus my trades. So some of my shorts might look like they're repeating themselves. Sometimes I have to check, like, yo, did I already repost this? But I'm trying to get some consistency within my trades. So you guys it might look like duplicates, but it's not. And the reason it's not is because I'm looking for, can I take this trade 100 times and make money? You can take a double top and make money. However, I don't know if you could take a double top in an uptrend and make money. If we were below the EMA, let's go. If they didn't have this close, I'd be down. But I just wasn't really feeling it after this strong move at fresh highs. I'm sure a more experienced trader was short of this in no time. But for now, I'm just looking for those easy base hits to get some serious consistency because I'm tired of it. I have to do an account update. I got 2 live accounts, but not the same 2 live accounts, but we'll get into that later. So double top into the EMA, make a good short for the bears, and now bears are making money in a bull trend. So this tells me we're not in a bull trend. At least we're in a range. I don't think we're in a downtrend yet, but we could be range bound. Well, we are range bound. Bulls and bears are making money. If bears weren't making money, we'd be in a trend. This bar looks big enough for a second leg, and they get their leg 1, leg 2 move. Here they push down, and we can see it start. I'm going to delete this. I'm going to delete that. So bears get their leg 1, leg 2, and the leg 3 starts to fail around the high and last week's high. So this could be range lows temporarily, where we push up, we created a good top, and now we have a good low. This is how we can start to structure a trade as new traders is we first pull back into the EMA, could see recent highs, which is still about 9 points, and this is something you could consistently do in a trend, is buy the first pull back to the EMA. Here we start to see strong wicks, and I think bears want to test. They want it to get lower here, close here, and then get back to this price in short. However, they weren't able to put a close below the yesterday's high, so this is still bullish price action to me, which is another reason why I didn't want to get short here until we started to break down for real. But we didn't really break down at all, so I think this would be a better long once we started to close above the EMA to recent highs, and that was the trade I was looking for, although I mismanaged it. We can see the bars start to get bigger, and bulls are starting to rally more and more. Yeah, this looks like a good bear signal, but you have to be suspicious. Because although this is a good short signal, they had to rally, and we're rallying after a bull trend. So what does this rally mean? Maybe this was like buy stop order, scalping out. I wouldn't. This could have just fallen. It could have just kept selling, but with this candle not breaking this, if you want to get short, maybe at least wait for a follow through. You don't have to wait all the way low here, but wait for this bar to get some sort of follow through, because this is a fishy price action. It just looks so nice, but also look at the close. We didn't even close below a key level. In terms of like this miniature range, this is a tight trading range. We should stay out. We didn't close below yesterday's low. We don't close below last week's high. We don't close below this week. I really think this was like a trap. And look, bulls, I think a lot of bears saw this, got no follow through, and had to buy back their shorts, and that's what creates trap traders, trap bears, bulls buying lows. Bulls go for a new high of the day, but they start to stall around the previous swing high. This gives the market a lower high appearance. That's bearish market structure. Bulls start to get closes, but not strong closes. Oh, pause. So this is the new high of the day. Bulls are getting nice closes, but they're just not able to keep the close above the high, like not even by one strong tick. They're just not able to do it. So I think as price started to stall, the bulls starts to give up. Also, we can look at it as a leg 1, leg 2, so that's 2 flags, and leg 3 fails. This is a bull flag as well. So even if you didn't want to trade the first pullback into the EMA, you could still trade this from a bull flag perspective, right there. And also, this is a little more confusing, but I'm gonna say it anyways, because most of you guys are trading price action per Al Brook's methods. Al Brook says like bear channels break out from, it can have a bullish breakout because it's actually a bull flag. And on the contrary, bull channels can have a bear breakout because it's actually a bear flag. So this is a broad bear channel, but it's still a bull flag. And I think this is what Al Brooks is talking about when he says bear channels have bull breakouts and bull channels have bear flag breakouts. I'm gonna look for an example of a bear flag after the breakdown. I don't want to jump in between charts. But here is a bear channel. Technically, this is a bear channel, highs to lows, and then have a bullish breakout. It's a bear flag. It's a bull flag now. And bulls want, when this happens, bulls are aiming for previous highs and then new highs, maybe a measured move up of the range, not the necessary. Well, I mean, you can do a measured move, whatever you want. I do of the range. Bulls fail to make a new high, and the bears short. I think bears start to get trapped because this is starting to act as support right here. We are stuck within the upper range, put in the right here. But we're just trading within the upper range. It's pretty hard. I think traders should wait for follow through on either side. So 2 bars, so we'd have like this, like 1 strong bar and 2 strong bars and then short. I mean, and then get long. We don't get that on either side here. No bars. Here we get a little bit of follow through. You can scalp out. If you were to go for a 1-to-1, I'm pretty sure you could scalp out if you're fast enough. Yeah. So if you shorted this bar market, you do get your 1-to-1 on bar 37. Where was I going with that? Oh yeah, the follow through. So this bar, so what I'm saying is, if you were looking for a trade, this bar did get follow through, whereas these bars are not getting follow through, unless you have limit orders, which is a different story. You know, you're gonna scalp out, but I'm talking about people who are putting buy stop orders or market orders. If you guys are doing market orders, try your best to stop doing market orders. Those things are dangerous. Force yourself to do force yourself to do stop orders. I have saved myself a lot of money doing this. Like, it is actually crazy how much stop orders are beginner friendly, because half the time the market's ranging and we're not in a breakout. So if you think about how many times you buy a breakout and it turns around, it's because you bought the high of a range. So if you put a stop order, you're just saved. So many times I would buy this, but then I was like, let me just put a stop order 1 tick. I just got saved. And it's things like that help you save like your P&L. Like, that's a couple hundred here, a couple hundred there, a couple hundred there. It starts to add up. I think by me not taking by stop orders, it's eliminated a couple bad trades a day, which add up to a couple $100 a day, which add up to like a couple $100 a week and in a month. Okay, so we get a bear surprise. You can see bulls. This is a failed breakout, given a triple top appearance. So we go body to body, right? And okay, I'm gonna finish this sentence. So they get a strong close above the high of the day, but really, really bad follow through. Remember, like 30 seconds ago, I was like, wait for 2 bar follow through. They don't get that, so I think this makes a good level to short, because we are at range extremes. If we are to break this into threes, we are trading at the upper third of the range. So short the high of the range into the lower of the range, and the lower of the range would be yesterday's high or last week's high. I was done trading at this point. I think this is like one of the last bars of the day. The last bars of the day can get very, very institutionally, if that's a real word. Like, it's the institutions trading, so it's good to get out a little bit before if you're still learning how to trade. Trading is all about, like, in my opinion, I guess it's not all about nothing. It's just, all I'm trying to say is, if you're a beginner, there will be a time in our lives where we can scalp this, where we can short these, where we can scalp out, blah, 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 blah. But we have to get profitable and start to get a good relationship with the markets before we get in crazy. So yeah, that was today. It was pretty good. Strong push up. Congrats if you caught this. I was more trading the range just because I'm trying to, like I was saying earlier, if I could take this trade 100 times, would it work? So what did I want to talk about? Oh yeah, bull flags with bear channels that have a breakout, right? So this was a bull flag with a bear channel. We broke out. So now we're going to talk about bear flag with a bull channel real quick, just so we can see the opposite. So you guys remember this conversation about how bear channels breakout is actually a bull flag? Let's see. I guess right here we could even, how far do we have to zoom out? Okay, here's a good, I can see one right here. That's not a good one. Yeah, it is a good one. No. Here's an alright one, just to kind of get my point across. This is not the best example, but channel. See, this is a bullish channel right here. Do you guys see how it's a bullish channel? And it had a bear breakout because it's actually a double top bear flag. That's what Brook says when he says, like, bull flags will have bear channels that break out, and bear flags will have bull channels that break out to the downside. And this is that example of bear channel, a bear channel, a bear channel, a bull channel that gives a double top a bear flag, and then we sell. That's enough of that talk, because that is like a mouthful trying to say over and over again. I hope you guys got the picture with those flags and channels. It's a little confusing, but it kind of makes sense when you see it really happening. Just reset the chart. So yeah, that was the price action we had these last couple of days. Pretty nice, pretty good. I hope you guys are making money. Yesterday, we'll go over the daily, hourly chart real quick. We're not making too many moves, so I'll just keep it quick. We are trading above last week's high, and we can see that right here. This is the overnight price action, and we're still trading above the high, so that's not the worst. You know, bulls definitely want to keep the high going, and it looks like we're going to have some overhead resistance if we do keep price up right here. Bears obviously want to see this as a bear flag double top. Bear flag, leg 1, leg 2, double top, leg 3 maybe. I don't think that's going to happen just because it's a really strong rally up. Maybe we tag the 50% line. And there's also this bigger daily trend channel. It was kind of like this, and then we broke out of it, and now it's kind of like that. So I'm trying to get better at drawing these channels. So I think like we could somehow have a pullback and test a little bit higher. But I'm gonna delete these because now we're getting into where I'm trying to study, where I'm trying to teach you guys what I know. So. Which I don't know. The markets, you could be right or wrong depending on your account size, right? Like, I could be speaking to someone with $100 in their account, telling them, like, so for instance, I didn't do this, but I was doing other things, but this is not a bad buy to me. With a 10-point stop, I used 2 contracts, that's a $100 stop. You say to a beginner, hey, yo, this is a good buy with a $100 stop, and he's gonna start freezing up because we don't know his account size. Or you tell someone with a $100,000 account size, yo, get along here, and he's gonna be like, yeah, I'm buying the close until I can't, and he's gonna make a good amount of money too. So everything is relative to yourself, and price action is fractal. So I don't know where I'm going with that. Price action is fractal. Here's the hourly chart. We had strong pushes up, and we're starting to see some climactic moves. Maybe we get another push up and create a wedge top, and then have a pullback. We have FOMC coming up, so be careful. I think it's happening. I think it happened when you guys see this. It'll happen today. Keep studying, keep trading price action. I hope you guys are starting to have a little more context through your day, because at the end of the day, the bars don't really matter. Okay, the bars matter because they read price action, but what matters is the context behind the bars. It's the forces that drive the bars is what we're trying to read through the price action, through the bars. That's why we don't have indicators. So keep it up. Thank you for commenting. You guys are really helping out. I hope you guys are doing good. We're going to hit it. We're going to do good things or make some money for the holidays. It's been a long day. I've been in and out yeah. Okay. You guys have a good day. Goodbye, everybody. Give everyone a hug. Talk to you guys tomorrow. Bye.